Well, we only have a few minutes as we get to the closing bell on this shortened holiday trading session. Just taking a look at the three major indices, all slightly in the green during this session. I want to bring in our guests as we head into the close. We have Yahoo Finance's reporter Jared Blickery. Also joining us is Victoria Fernandez, Crossmark Global Investments Chief Market Strategist, and Paul Schatz, Heritage Capital's President. Welcome to you both. Victoria, let's start with you. Your reaction to the activity we've seen, the news we've gotten out of Washington, D.C. as we head into the close.
Well, I think when you're looking at the stimulus package and how that's going to help us going forward, there was so much anticipation that we were going to have the stimulus in play before the end of the year, which was really going to help consumers put some extra money in their pockets and let that flow into the first quarter. We've had some weak economic numbers here in November and December, and we had that weak handoff. So we were really hoping for some strength to come from there. Having those pushed later, I think makes the whole recovery trade push later into 2021, where we would be thinking a first half strong recovery. Now that's looking more second half. I don't think it really makes the markets pull back. We see a very muted reaction today, even though it's a short trading day and low liquidity, because the market anticipates it will come at some point. Now it might just have to wait a little bit longer.
And Paul, I want to bring you in as well. And you shared some notes about the Santa Claus rally, which usually begins today. So your thoughts, do you think we're going to see one heading into the final days of 2020?
So what is the textbook Santa Claus rally is last five trading days of the year, first 2 trading days of the new year. In the grand scheme of things, it's irrelevant. Most of the research that you do, Santa Claus is kind of debunked. Yet we're supposed to see a very mild or a continuation of this mild drift higher. I think the S&P is certainly lagging everything else. There's no sex appeal on the S&P right now, if you will. Santa Claus should call. We should see this mild drift higher into 2021. There should not be a lot of fanfare next week. It should be a relatively quiet week. I would expect the small caps to have a little bit more of a push, but the whole idea that there's this huge run because it's the end of the year, data doesn't support the claim. I would be very concerned if the market rolled over next week. That would add further fuel to my fire that we're going to see somewhat of a short, sharp downdraft in Q1. But let's not put the cart before the horse. We'll see what happens in early January.
All right. Well, Paul and Victoria, stick with us. We're going to bring in Yahoo Finance's Jared Blickery to take us into the closing bell. Jared, what are you looking at?
Well, I'm looking at the muted market action that we're having today. Let's go to the Wi-Fi Interactive and check out the price action. Here is the Dow up 70 points, or about 0.25%. You see, we briefly dipped into the red about an hour in the final trading hour here of this shortened day. NASDAQ a little bit stronger, up 0.25%, as well as S&P 500 up at session highs right now, but that's only about 0.33%. Russell 2000 notably strong most of the week, down about 0.33% here. Now, I've been looking at some stocks in the NASDAQ 100 and a forum member, Alibaba, all day long. And we'll just check out the NASDAQ 100 first. Pinduoduo, benefiting from Alibaba's antitrust woes over in China. That's up 9%, followed by Tesla, KLA, that's up 2%, and then Lam Research. So some of the chip stocks contributing to the gains we're seeing here. Notably to the downside, Moderna having a rough patch, down another 5%. Zoom having a rough month, that's down 2%. And we'll just take a look at what it's done month to date, down about 21% or so. And looking at the sector action for today, kind of an interesting mix. Real estate and utilities leading the way higher as a 10-year T-note yield drops. To the downside, energy, the biggest loser, off about 0.7%, followed by industrials. That's also down about 4 basis points here. And here's the closing bell on Wall Street.
And it's a closing session, a shortened session here on Wall Street as we take a look where markets are probably going to settle. The S&P 500 is going to settle up probably around 13 points. Dow will settle up almost 80 points. Nasdaq's going to settle up almost 30 points. The Russell 2000, it will probably settle down almost 7 points. And the sectors, just want to let you know that you're supposed to kiss under the mistletoe because it's green and all kinds of things at Christmas. Only one sector in the red, that would be energy, and nobody wants to kiss oil, right? So as we take a look at where these markets are settling, we want to go back to our guest. Let's bring in Paul Schatz. Paul, I keep hearing people say that the S&P 500 is going to hit 4,000 as we get into 2021. Forget the fact that things are kind of expensive right now. There's a lot fundamentally with this economy that is actually working despite the pandemic, or is that a wrong assessment?
Hi, Adam. Look, we continue to have the have and the have-nots. It's been the same deal for the past few quarters, that you've got the companies that are rocking and rolling and the companies that were previously on the rear ends, but now are on the hopes that the vaccine is going to work. People are going to get out and travel again. My only cautionary tales, I'm going to get out and travel. I mentioned to you and Julie, I can't wait to get out and travel, but I'm not the big ticket item. I don't have the Adam Shapiro money. The big business travelers are not going to be running out, and I don't see the surge of conferences and corporate meetings in 2021. But I do agree. I do think the S&P will see a peak over 4,000 in 2021. Before that, I think this dot-com era-esque greed and euphoria is going to get punished with some type of hit over the head during Q1. But I would say that's a decline to buy. It'll shake out the trees. It'll get rid of some of these latecomers who think there's only one way in the market. But overall, yeah, I think that the economy is in a better spot with the more stimulus that will continue to kick in, and the economy should be absolutely fine for 2021.
Well, Victoria, I want to bring you in to react to that. And what are the risks that are going to be on your radar that could derail some of this in 2021? What are you paying attention to?
Sure. So similar to Paul, we don't anticipate that everyone is just going to jump back in to where they were pre-pandemic. So when we look at where we've come from March and April, the consumer and the consumption numbers have really been key to get this market back to where it is at this point in time and these continual new highs we're seeing. So for us, the biggest risk going into next year is going to be that the fundamentals don't hold up, because at some point, COVID headlines are going to start to drift away. We've got the vaccine that's rolling out. There's going to start to be reopening probably in the springtime. So we need those fundamentals there. We need manufacturing to continue to do well. We need durable goods in there. We need the consumer to continue spending. If we don't see that, that's going to be a risk. That's why we really don't like betting on some of those reopening trades, the cruise lines or the airlines, because we don't anticipate that that's going to be something that's going to pay off. We do like that growth sector a little bit. We're weighted a little bit heavier towards growth stocks at this point in time. And so we would say, look in there, things that have to do with longer term trends coming out of COVID. Doesn't just have to be 5G. It can be other areas as well, like retail and housing. Look and see even credit cards. See where you can find some opportunities there on pullbacks that we have.
Do you see opportunity by any chance, Victoria, with Tesla? Or, I mean, there's some analysts who are saying that Tesla is going to fall drastically in 2021. What should we as investors look at?
Yeah, so, historically, when you look at companies that have been added to the S&P, over the 12 months following that addition, the stock really tends to come back and underperforms the rest of the S&P. So we do not own Tesla. When you look at the balance sheet, it's really not, it doesn't fit into the thesis that we like to have that has low net debt, high cash flow. It just doesn't fit into that thesis for us, so we don't own it. But if it's a name you want to own, if there's so many people that really don't care about the fundamentals and the balance sheets, they're just gung-ho on the product itself, then I think you wait a little bit, let that name come back, then you can add it into your portfolio. But it's not a name that we currently own.
And Paul, you had in your notes about potential rally killers. What do you think could derail this? What are the things that you need to be paying attention to?
Right. So I just had this conversation 3 times this morning with clients. What could be on the horizon to hurt the market? Well, clearly, number one is if both Senate seats go blue in Georgia, That will change the tax policy. We'll get more stimulus, but I think that I'll downgrade my opinion of 2021 and 2022 if that happens. Number two, no one talks about what if China raises interest rates? You want to talk about throwing the currency markets into a global tizzy? That's a big one. And that certainly could happen. I wouldn't rate it a likelihood yet, but if you want to say what could trip the market up, sure. And look, if the greenback, if the dollar begins to rally, that very few are positioned for that. So those three things, of course, the virus and the vaccine, but those are all known things. I don't think anyone would be shocked if something happened with the virus or the vaccine. China raising rates and the dollar rallying would certainly throw the currency markets and the credit markets into a tizzy in 2021.
Paul, a follow-up to that, though, it doesn't have to be China to throw things into a tizzy. I've been seeing leaflets throughout New York City about tax the rich, tax the rich, tax the rich. And if the Democrats were to win Georgia, would you see a move to do just that, capital gains, all of that?
100%. And I again had this discussion this morning with a client who was pushing back on me that Biden is a moderate and they wouldn't raise taxes. And I said, if both seats go blue, which is probably about a 1 in 3 chance right now, I think in the first 100 to 120 days, they're going to raise corporate taxes, raise capital gains, raise income taxes on higher earners. And even though there'll be more stimulus coming to quote unquote offset part of that, that's a longer term negative for the market. And I think maybe we still see S&P 4,000, but that'd be a peak and perhaps a peak of significance into the midterm elections. So yeah, maybe Joe Manchin somehow goes from being a purple guy to maybe a light red guy if both seats go blue. But frankly, I'm not putting my investment eggs in Joe Manchin's basket.
All right. We want to say thank you to Victoria Fernandez, Crossmark Global Investments Chief Market Strategist, and Paul Schatz regarding that Shapiro money. It'll get you a Studebaker, which you can get for about $1,000 on eBay right now. All the best to you, Paul Schatz, Heritage Capital President.